Hi, everybody, and welcome to the Executive Buying Weekly Market Wrap for April 21st, 2017. Let's get into it right away here. What we did was we added Wells Fargo and Company, WFC, on the New York Stock Exchange. This company is currently trading at $52.90 per share. And the reason we added it was the company's CEO and director, CEO's name is Tim Sloan, director's name is Steven Sanger, purchased a total of $5 million worth of Wells Fargo stock at $51.65 on April 17th. Now, as always, what I want to focus on is the insider that has the great track record. So in this case, it's the president and CEO, Tim Sloan. Now, Mr. Sloan's previous purchase, before he stepped in and bought shares of the stock, he was able to put himself in a position where he actually bought in April 2011 at $28.54 a share. So it was about right here in his previous purchase. And what wound up happening was after a brief period, he wound up selling the stock 60% higher up in the $40 range. Okay, so we obviously saw a bit of a dip and then just a consistent uptrend for a nice 60% gain. So what winds up happening with these companies is you want to make sure that the insider you're following is buying shares and with their own money and the ones that have a good track record. So what I wanted to do is just make sure you understand what you're looking at here. We're looking at a monthly chart of Wells Fargo. So every one of these candles is the price range for that particular month. So if you look at this month right here, the low was around 51, the high was around 56. He stepped in more towards the low and bought just about $3 million for himself. And it's trading right now at 52.90. So we had the stock all the way up at 60 bucks. I think we can get there again. That's why our target is $60. Just in case I'm dead wrong here, I'm not willing to risk too much on this, only because we're in a situation where Wells Fargo had some really negative press about people at their company opening accounts without the consent of their customers. And that kind of threw this company for a loop the last couple of months. So now maybe the CEO thinks that is behind the company and moving forward. So that's what we added. To move along here, the other thing that we're doing is we're actually taking a look at the overall S&P 500 and how it did for the week. So what you'll see here is for this particular week, we started the week here on the 13th, okay? And now we're looking at the S&P 500 ETF, the spiders, and we're looking at their hourly chart. So every one of these candles that you see here is 1 hour within the week, okay? So we closed the week right at this level, and we just made a series of higher lows and higher highs, which is always a good thing. We obviously ended the week off on a down note, and part of the reason I think we were ending the week off on a down note today was we actually had two big deals. Number one, the North Korea situation is just continuing to have kind of an effect in a negative way because a lot of people think that there's a possibility of some sort of skirmish war, whatever you want to call it, to break out there, and that's probably going to throw people for a confidence loop if that does break out. The second thing that's more pressing in my mind is the French election. So the French election's coming up. I'm not a French political expert, although many seem to claim they are these days. The reality is there's one good choice for the markets, so it seems, and one bad. And I never take too much of this into what I do from a day-to-day observation. I think this is the type of stuff that builds fear, which allows people to get better prices if they're being opportunistic. So those are the things that are weighing on the markets right now. And the market, from a monthly perspective, if you take a look at the monthly chart, we are still in a very big uptrend since 2009, even though we had some sideways action for about a year and a half from 2015 to the middle of 2016. And now we're starting to get a little bit of a pullback again the last couple of months. So long term was still in an uptrend. Short term, we're having a bit of a bumpy road here. The other thing that I wanted to note for this section of the video was just simply supply and demand. Supply and demand is always shown on these charts by how the market and how the price reacts to certain levels. Just to give you a quick example, if you take a look at this monthly chart of the S&P 500 or the spiders, the SPY, the ETF that represents it, you'll actually see here, let me just get my pen going here again. You'll actually see here that in about October of 2014, we had a very significant dip and it was bought and the stock market continued to go higher, at least stay higher. And then again, in August of 2015, we came down almost to the exact same level and went much higher again. As we continue to see these dips, we kind of did a double dip in January of 2016 and February, and then we saw a bounce back higher again. So why is it bouncing off of this exact same level all the time? And the reason is you're looking at people who want to buy the dips because they may have missed out on this big rally. So then when they see this opportunity, they buy it and the market goes back up again after it sees that the sellers get exhausted. So what happens? So in this first dip here, okay, you have people that wanted to buy and bought it and saw a tremendous increase from 180, let's just say, up to 210. And those people want to buy more at that level if they could get their hands on some. You have the people that also sold the stock at 180. Now, those people that sold stock at 180, what do you think they're thinking? Oh, if I could only go back there again, I'll buy the stock back because that was such a dumb sale. And you have the people that were indecisive on the sidelines. They wanted to buy it, but they decided not to. So the next time this comes into this price range again, you have essentially three groups of people: the ones that bought it that want to buy more, the ones that sold it that want to buy back, and the ones that indecisive that wish they would have bought it, are all lining up with their bids to buy this market at this level. So once the market comes down to that level and sees there's enough buyers there that it's not that it kind of wears out the sellers and there's no more stock for sale, then the prices start to increase again. So I hope I'm not being too in the weeds with this, but basically the reason why I always say price is all that matters is because it's a direct representation of supply and demand. And when you see the same level hold over and over again, 2 or 3 times in a row, and it bounces off that in a big way, that's a really bullish factor because it shows that there's a lot of demand there and it's going to be really hard for the price to get lower at then that point because of having such aggressive buyers. So I just wanted to make that clear. What we're looking at on this chart is every candle is a month price action in the S&P 500, and hopefully that helped for this portion. I know it was a little long-winded today, but I hope you guys have a great weekend, and I appreciate you checking in with me.